is the jobs market so hot? Like every time we look at these unemployment data come out, you always think it's going to tick up. This is the month it's going to tick up. Why hasn't it?
Yeah, so there's sort of two key factors. The first is that the RBA has raised rates by a lot less than other central banks. It's taken a deliberately softly approach. So while the 4.35% cash rate, is tough for people with a mortgage, a lot of other central banks went above 5%. So by doing less, it's preserved some strength in the jobs market. And then the second factor we've got is government spending. We've seen really rapid growth in employment in government-funded sectors like health, education, the public service. So while the private sector economy has been struggling, that really hasn't translated through to the jobs market in aggregate because of this extra government spending.
You had in your headline today that there is a chance that rates go up. That's the last thing that most people would A, want, but B, that's not even where the dominant thinking had been in terms of when's the cut, that's all we're hearing. Do you really think there's a chance that it goes up?
I think a more realistic scenario, which I suspect is more what the IMF was hinting at, is that it would be rates at their current level for a longer period of time than people are expecting rather than another rate rise.
So no pre-election cut potentially, because that's basically Jim Chalmers, if he's watching, banking on this cut potentially February or was it April potentially. That would be in the window for an election. But there is still a real prospect that neither of those two eventuate.
Yeah, so at the moment, markets are fully priced for an April, the first rate cut, which would be sort of the last possible chance that could happen. There's the election has to be held by May the 17th. There's an RBA meeting on May the 20th. That doesn't particularly help them. So if they don't get it on April 1, they don't get it at all. And while markets are fully priced for a cut at the moment, these things do change quite a lot. It was only a few weeks ago that markets weren't priced for a rate cut at all before the election. So
they keep changing their mind.
They do, and it keeps me employed.
That's true. It does keep you employed. We like that. I wanted to ask you, the IMF has some policy prescriptions in these sort of reports. It talks about the need to slash their capital gains tax discount. Every time these come forward, do governments even listen? Why do they bother saying you should do this if the governments don't ever care?
Yeah, I suspect governments aren't listening. The IMF has said the same thing for quite a while now. It's called for a cut to the 50% capital gains tax discount as part of a broader suite of really ambitious tax reform, essentially designed to take some of the tax off income, off direct income taxes. It's also called for changes to superannuation tax concessions, which it said benefits the wealthy. It's also called for sort of sweeping housing reform, like shifting from stamp duty to land tax, all of these really difficult things that it loves saying every year and then we love not following through with every year.
It's good on us. We listen to them when we just go, we'll park that over there. Michael Reid, thank you so much. Merry Christmas.
Thanks, Trudy.
For coming on.